Asset management company guides in such a way that how the assets are to be managed either by the company or the investors. The third phase was 1993 to 2003. This is a stage where launch of private sector. The second stage was public sector. Now it is the private sector. First I have to collect all the information of the client and I have to build a better relationship with him and I have to guide him and motivate him. Warm welcome to 4th Sem B.Ba students, the subject financial education and investment awareness. In today's session, we're going to learn about mutual funds. I'm Professor Rajesh L.R. from Department of Commerce and Management, Vidhyaashram, First Grade College, Temple of Excellence, MYSURU. In today's session, we are going to discuss about what is screen-based trading and market participants. Key market participants are mutual funds history in India, mutual fund houses in India, mutual fund schemes, and the 6-step process that is used to participate in the financial planning. So these are the topics what we are going to cover. The first one is screen-based trading here. Advantages of all the screen-based trading system is it electronically matches orders on a strict price and time priority and hence cuts down on time, cost and risk of error. They're saying that when screen-based trading means we're going to have the trading on the online by viewing the screen and we're going to block the shares or the stock of the company for certain price, and when it increases, the prices increases, we're going to sell that one in the market. That is called screen-based trading here. It allows faster incorporation of price sensitive information into prevailing prices. They say that when in the screen-based trading activities, it gives us every second the information, what has happened to your investment, what you're blocked, whether the prices are increasing or decreasing. If the prices are increasing too high, it gives a clue for you people to sell that one. If the prices are declining, it says that one hold for certain time and then you trade the concept. That's the thing what we have. It enables the market participant irrespective of their geographical location. It says that one, it enables all the people from anywhere in this world, they can invest in any company's stock and they can block the stock and they have the trading activities. Then what is screen-based trading? It provides the advantage what we have. It provides full anatomy by accepting orders by big or small from members without revealing their identity. They're saying that one, even any person can invest here and the amount is not limited here. They can even invest the small amount, the huge amount. They never collect the identity who is going to block the amount here. It also provides a perfect audit trail which helps you to resolve disputes by logging in trade execution process entirely. If there is any issues takes place, it gives clearly that one, how to audit that one, who has entered, and that is nothing but who has logged in and what he has done, how much stock he has taken and what he has done, whether he has traded that activity through from his system or not, where the default has taken place. They're going to identify, then they're going to solve the issues very easily. Who are the market participants we have here? Market participants are nothing but the brokers and dealers. Means to sell my shares or debentures or any stock related concept here, we are going to get the support of the brokers or dealers who support us to trading activities or to sell the shares or debentures of the organization. Merchant banks, investment banks, these banks will support us for either for the company or for the investors. Depositories is nothing but the people who are going to deposit in the company's investments. Depository participant means either it may be a government or it may be an individual or any person who is investing their money on the company's capital for the betterment of the company, in the same time to have better growth for the investment whatever we have made here. clearinghouse, custodian, registrar, and transfer agents. These are the participants are there who supports either directly or indirectly to the organization for the benefits of the organization as well as for the benefit of the investors. Now, the next part what we have here, key participants, the mutual fund industry. The key participants in the mutual fund industry are sponsor. Who is sponsoring? Means on behalf of me, somebody is going to support me for the purpose of the rising the capital in the market. Somebody is going to invest in my organization. Trustees. Trustees is nothing but the people who have formed a person or a unit where they are going to invest their money in the company, and they are going to use the benefits of that one in the same way they're going to give the benefits to the investors also. Asset management company. Asset management company guides in such a way that one how the assets are to be managed either by the company or the investors. Custodian and the subscribers. Subscribers are nothing but it may be a general public or any government or it may be any organization where they're going to subscribe the mutual funds of the other companies here. Registrar, transfer agents, fund manager, fund accountant. These are the people who are going to support in such a way that one they're going to say what is the fund criteria is there and how it has to be influenced to utilize that amount and how to manage that one. And even they're going to guide in such a way that one when to invest, how to invest, where to invest, why to invest. Like this, every concept will be discussed, and these people support not only the organization, even the investors. The major history of mutual funds in India, where it started, how it started. The phase one was started in 1964 to 1987, the establishment stage. This is a stage where the mutual fund concept came into India. The main objective was to encourage, facilitate wider participation in the financial markets by the investors and the institution. They're saying that when this concept was introduced with an intention to support the investors, with the eventual goal of strengthening economy of the country for the purpose of the country and for the increase in the economy level of the country. This concept was introduced. UTI initially worked under the administrative and regulatory control of the RBI, but was delinked from the RBI in 1978. From 1964 up to 1978, UTI has worked according to the orders or with the support of RBI, but in 1975 it was delinked, which is now Industrial Development Bank of India took over its administration and regulations. And the next one, second phase, from the year 1987 to 1993, launch of public sector mutual funds. There it was established with UTI, and the next we have a public sector mutual fund. The first public sector mutual funds entered the market. This mutual funds was set up and managed by Insurance Corporation India, that is Life Insurance Corporation of India, LIC, which started in the phase 2 issuing of mutual funds for the betterment of the country and in the same time to support the investors and other people. LIC also established its mutual fund in June 1989 and GIC set up its mutual fund in the December 1990. LIC was started its mutual fund in 1989 and GIC started its mutual fund in the December 1990. At the end of 1993, the mutual fund industry had assets under management of 47,004 crores. See, this is the amount what they have received from the public, which supported the country's development and other part here. The economy stage was increased. The third phase was 1993 to 2003. This is the stage where launch of private sector. The second stage was public sector. Now it is the private sector. The first private sectors which started with the SEBI mutual fund regulations came into effect in the year 1993. Fund was Kothari Pioneer, now merged with the Franklin Temptation Mutual Fund, which was registered in July 1993. The funds which the help of the SEBI, it was started in the year 1993, and now it is merged with the Franklin Templeton, which comes under the concept of July 1993 merging concept, where it started to merge with certain organization to issue the mutual funds and to get the benefits here. The fourth level we had from 2003 to 2014, Consolidation and Slowdown. In 2003, the Unit Trust of India Act 1960 was repealed and UTI was bifurcated into two separate entities. See, in the year 2003, the UTI was divided into two parts, and in that one was specified undertaking of the Unit Trust of India, that is called SUUTI, and UTI mutual funds, which functions under the SEBI mutual fund regulation. These are the two sectors which divided, and now then we have the non-control of the concept. What do we have here? The global meltdown of 2009 had impact on the financial markets around the world as well as in India. Investors who entered the market during the peak saw steep fall in their portfolio values. In the year 2009, there was a great fall in the market. Every investor has to face certain problems, not only in India, in the entire world. Phase 5 from 2014 till date, with a view to correcting and regenerating the mutual fund industry after years sluggish growth, means slow growth. SEBI introduced several new measures to enhance the image and trust in the mutual fund. They started to create some trust concept for the investors to invest the money. Anyhow, it is growing slowly. From now onwards, we will never do or never take any types of wrong steps. Now it will be controlled and supported for all the investors. The main specific penetrate more tier 2 and tier 3 cities to increase the pool of investors. They're saying that one, they started to collect the amount from such a place where they can generate huge amount of money from the public through the mutual funds by giving benefits for the investors. And which are the major fund houses are there in India? The first one is Axis AMC. Next one is Aditya Birla Sun Life, Franklin Templeton and HDFC. And next one, IAM India, Invesco Asset Management, Kotak Mahindra, LIC Mutual, Motilal Oswal, Nippon Life India, SBI Funds and UTI. See, these are the fund houses are there in our Indian market, which is issuing the mutual funds to the public and where the public is investing and gaining money or benefit from the houses. The next mutual fund schemes are here: organization structure, portfolio management strategy. In the organization structure, we have open-ended mutual funds, close-ended and interval mutual funds. Means it is open to all, and whenever they want, they can purchase and they can invest or they can withdraw. Close-end means it is not like that. We have to invest and we have to wait for a certain lock-in period. And investment objective is growth, income and liquidity. Underlying portfolio, equity, debt, hybrid, money market. These are the mutual fund schemes are available in the market. Based on the scheme benefits, the investors has to analyze which companies concepts is better in this area and which is going to give more benefit for me, and how I can get the benefited my investment, and in the same time there should be some safety on my investment. I should have a control, and the company cannot say that when we have taken a wrong decision and the amount has been lost in the sector. For that reason, nowadays every investors has to take risk and they have to invest. In the same time, the risk what they have to take to safeguard their money, and they should not invest in companies where there is no growth at all. If they're investing, it is not the risk of the government, but the risk of the investor. Exchange traded funds or fund of funds means funding for the funds. I'm going to fund for the purpose of to gain the amount from the market here. The following is the 6-step process what we have here. There are the 6 steps are there where I can plan in such a way for the future benefit. The first step here, establish and define the client-planner relationship. That is nothing but if I am a financial planner where I'm supporting the general public, the first thing I have to establish and define the client-planner relationship. I have to have a better relationship with the person who wants to save his money for the future benefits. First, I have to collect all the information of the client and I have to build a better relationship with him and I have to guide him and motivate him. The second one, gather client data including goals. At the time of having discussion with the client, first collect all his information in the form of what is his future goals with the financial terms and what is the term is of the goals, whether it is a medium term, long term or short term. Means when the client requires amount, how much he requires and how much it is possible for him to invest. Analyze and evaluate the financial status of the client. First, analyze whether the client is getting sufficient of amount of income and whether he is making all types of expenditure properly and whether he is saving any amount, so where we can guide him. If it's not saving properly, so we can inform or guide him to reduce certain amount of expenditure which are unnecessarily is making. Develop and present financial planning recommendations for him. After collecting all the client info, prepare a plan and just present that information through the future benefits in such a way that when the client should think that when where I've done a mistake, oh, this is the area where I've done a mistake. Now I should not take wrong steps in those areas. That amount can be invested in the market and we can get the benefit of the concept. Implement the financial planning recommendations. Now, after presenting all the financial sector information to the client, make him to invest in the sectors of mutual fund or in any other shares. Monitor the financial planning recommendation. After guiding the client, just have an observation of the client duties and other part, whether he's taking care of his finance or not, whether he's investing the amount in the required sector or not. Thank you, my dear students. In this session, we learned about the phases of mutual fund and even the types of mutual funds, whatever we have in the market, and the fund houses in the market we have, and the 6 steps of financial planning where I can advise my client. On this informations or with this information, you can get the benefits of learning the concepts of mutual funds and not only the mutual funds, the investment criteria also. One of the topic may be there for your examination points. So remember and go through all the information, whatever we have here, which supports you for examination as well as for your future purpose also. Thank you to one and all.